Hey traders, this is Taylor, and this is the watch list for what will be the week of September 27th. So, obviously, interesting stuff here last week. For the last few weeks, with the market up here at plus 2 ATR, we have talked about, making a few adjustments just in case the market does, in fact, basically do exactly what it did here and flush back to the downside. So, to take some of that advice up here and scale down a position size, give your open trades plenty of time till expiration, not slamming on the brakes, but just more so taking your foot off the gas with the aggressiveness a little bit, you can survive these pullbacks. And the beauty of being able to survive that pullback is, at least up to this point, it does look like potentially it's a pullback we want to buy into. So we finished the week here last week. Perfect structure to your weekly charts. So I think potentially all we just lived through was the ebbs and flows of the market with a pullback to the 21 EMA. It's just the fact that that's taking place here on a weekly chart. Your daily, your 4-hour, your 30-minute, they get tossed around a little bit. But in terms of the structure of a bullish uptrend, a dip to the 21 is completely normal. And in this case, it's pretty much overdue. Last time you really did this was back in October of last year. So weekly structure holds up there for the S&P 500. Weekly structure holds up in a beautiful fashion here for the Qs. Holding weekly structure, what this implies is that the trend is still alive and that potentially moving forward, path of least resistance could continue to be to the upside. I think maybe where you want to be a little bit careful is placing trades with the assumption that we rip right back towards the highs immediately. Granted, that has kind of been the theme here of this market. You get your dip, you get your rip, you get your dip, you get your rip, especially there of the S&P. You get these series of pretty aggressive 2 to 3 to 5 day pullbacks, and up to this point they just immediately rip the corner and head back towards those highs. I do think you want to take into consideration the potential we could chop for a bit here. So weekly charts lead me to believe the uptrend is still intact, and the daily charts just have me being a little bit patient here. Where these daily charts are not is back here in August. Back in August you got daily squeeze in the S&P 500, you got a bullish daily squeeze in the QQQ. That can provide a lot of tailwind. This structure here, a daily squeeze firing short, no stacked EMAs, we did a good job. Or the market, the bulls here did a good job of trying to clean this chart up a little bit in a pretty quick fashion with a move back through the 21. I just do think, taking into consideration, potentially we could chop for a bit here. So what this all means to me is that if the market can just simply stabilize, and we did in fact put in a bottom there at the weekly 21, if the market can just simply kind of hold up here firm, a little bit choppy, but no more selling pressure, if the market can simply stabilize, then I think things like Tesla, Home Depot, Nvidia, Netflix, pretty much just the setups that held up beautifully in the face of the selling pressure and the volatility over the last week or so, I think those are going to be some of the first stocks to take back off towards the upside. So a good example of this would be a Tesla here. Now, I do think you want to wait for a dip, so there's a few things I think you could look to build positions in now. Then there's a few things I think to your benefit to wait for a bit of a dip. If you do get a dip in Tesla next week, personally, I would be all over it here. So one you've been talking about on the channel for really a few months now, and the major focus has been this weekly squeeze, which at this point potentially looks ready to finally get something going. That weekly squeeze officially fires long, the 3-day squeeze officially firing long here. And you definitely got to take note, because this is really important stuff. In the midst of the shit show last week, there's $1 for the swear jar, but in the midst of the volatility last week, Tesla just holds up perfectly. Now, so if you compare a Tesla daily chart to a Facebook daily chart, this lost daily structure. It's got a lot of work to do here before it's a pretty daily chart again. Tesla doesn't have anything to clean up, it doesn't have to fix anything. It holds up just perfect. And you have that 4-hour squeeze here all week. Holds structure perfectly. So we did build some positions here in the mastery earlier this week. Or what day did we do this? Thursday, actually. I think we built our position Wednesday or Thursday. Took an entry in a put credit spread inside of that 4-hour squeeze with the idea here that, again, if the market explodes back towards the highs, that's a lot of wind at Tesla's back, at the very least here, because it held up so well. If the market isn't rolling over again, you might have the green light here to get the move you're looking for. So we're looking for a move into 780, 800-ish, and what we did in the mastery was October 15th expiration, and we sold the 745 by 740 put credit spread. Now, on my own, I got some put spreads at 735, 725, 700. Just about 5,000 of open profit here, but there's nothing happening with that position. It's a lot of back and forth, a lot of choppiness. But then you start to wake up here a bit, and then the premium starts coming in. So we're looking for a continuation here this coming week. Ultimately looking for that 4-hour squeeze to officially fire long. And I think you're looking 780, 790, 800. But if you do get a dip here, I think you look to take that. So Tesla's a good example of a stock that's just pretty much unfazed by the market throwing a bit of a tantrum last week. Another great example of this, which we don't currently have a position in, but would like one, is in Netflix. So it'll certainly be ideal to get a little bit of a dip. Can a guy get a dip here? But just look how good Netflix holds up this week. So the context here is that you have this weekly squeeze that was building up energy for like pretty much a year. Yeah, over a year. August into September here. Weekly squeezing for a year. Finally tries to fire that squeeze to the upside. The key is that on this most recent dip, previous resistance, 570-ish range, previous resistance holds as support, and it happens to do it right at the daily 21 EMA, which spits out a brand new daily squeeze, and there's a 4-hour, a really bullish 4-hour squeeze at that. So picture perfect stuff here. If the market can stabilize, I think you're looking for Netflix to continue its trend here into October's earnings. So in order for us to get a good risk reward on the put credit spread, we're going to need a little bit of a dip here early next week. But we're looking for put spreads for October 15th expiration. So we'll see if we can get a dip there. And another spot that we have a position in the mastery in, and we would like another one. We'd like a trade here for the options room as well. But Home Depot is another example. Pretty much unfazed by the market's volatility. The ugliest it got here was a dip to the 21 EMA. Otherwise, this really solid daily squeeze, the 3-day squeeze, and the weekly squeeze all continue to shape up nicely. So we've got put credit spreads that expire in 2 weeks down here at 325. That's where our short strikes are. And we're working orders to buy back that spread for about 70-ish% of max profit. And we're pretty close here. But I do think a good structure that could continue to provide some good opportunity, especially selling out the money put credit spreads on any dips into October, November. So we're waiting for a dip on Home Depot. We also, in both the mastery and the options room, have positions here in ZS. I hope you're seeing a theme. Market stabilizes. These are the first things I'm going to turn to. The Apples, the Facebook daily charts, they got a little bit of cleanup to do. A little bit of a renovation project. ZS here is picture perfect. Stacked EMAs, green 10x bars as far as the eye can see. Great uptrend. And inside that daily squeeze, we're building a position here inside the 4-hour squeeze. So for the options room, we have put credit spreads that expire this coming Friday. And then for the mastery, I think we're out here 2 to 3 weeks till expiration. But there's a good looking structure. And that is one not as extended as a Tesla. So a little bit closer to the buy zone. And then the last thing I'll share with you here is NVIDIA. And before we take a look at NVIDIA, I think you got to have a little bit of love here for SMH, the semiconductors. Just in terms of structure here, sector to sector. Give technology credit. They got it back above the daily 21 EMA, which is key. It's kind of the first key to stopping the bleeding. But this is not a bullish structure. Negative histogram, red 10x bars everywhere, no stacked EMAs. So that might need a little bit of time. Financials, again, give them credit here. Trying to clean up that daily chart, but it's not a bullish one. You do have a squeeze. You don't have stacked EMAs. You have a negative histogram. So a little bit of cleanup, I think, is warranted there. And then there's things like the industrials. Just getting spanked here. Healthcare. Sloppy at best. Communications. Again, sloppy at best, but SMH, the semiconductors, I think by far the best looking sector here. Daily squeeze, positively stacked EMAs. They pick it up with a vengeance here, back to the 50 earlier last week, and you're right back to the buy zone. So again, market holds up. Obviously, if the market just gets banging back to the upside, it's good for pretty much everything. But if the market can at least hold firm here and the selling pressure is done and over with, you got a structure to work with in the semiconductors. So King Nvidia would be my first focus here. Great trend, great daily squeeze. Again, that's impressive given the selling pressure in the market, how well it holds up, and not quite a 4-hour squeeze here, but there's a good structure. So we're pricing out a few trades on Nvidia, but then the Broadcoms of the world, the AMATs of the world, even potentially shortly an AMD. All good-looking structure within, I think, potentially the best-looking group right now. So keep in mind, next 3 to 5 days here, do expect a little bit of choppiness. This just isn't quite the structure yet where you have that maximum wind at your back, like you had back here in August. What I think instead is market generally might be a little bit choppy here, but names like a Tesla, names like a Netflix, names like an Nvidia, names like a Home Depot with ZS, etc., stocks that just continue to hold up beautifully here, they might have the green light to make the move we're all looking for. So there's a few things I think y'all should focus on. As always, appreciate you being a subscriber, and if you're not a subscriber, go on ahead and hit that button over there. But I appreciate y'all watching, so I hope you enjoy the rest of your weekend. Monday, I'll be live for pre-market prep. And then Monday, I'm also in the options room for the first 90 minutes of the session, and then I'll be doing the live trading for JC's Squeeze Pro class this week. And then for those of you in the Mastery, we'll have our live trading session Thursday morning. But one more takeaway here. Hopefully y'all paying attention to these videos the last few weeks, last few days really. You got to give a weekly chart a lot of respect. A lot of times what might feel like the market topping out, might feel like the beginning of the end, just nasty, 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 might just be a dip to weekly support. There's a lot of emotion in that, but in terms of the trend, it's healthy, and a lot of times it's a great buying opportunity. So one great example of this is actually Facebook. I just got done ragging on that daily chart, which I don't like the daily chart. It definitely has to do a little bit of work here, but that weekly, baby, that's a thing of beauty. Big push, pulled back to the 21. You hold support here. You got stacked EMAs, green 10x bars. I might be looking for some put credit spreads down around 350-ish here on Facebook. Really looking for weekly support to hold. Ultimately, potentially pushing higher into earnings. But those weekly charts, a lot of times in the face of volatility, they can paint rather a more bullish picture, or rather a more realistic picture, where the ebbs and flows of the market when they're unfolding on a weekly chart, they are going to toss around a daily chart a bit, but you can't really confuse this with, a complete reversal in trend versus just a bigger time frame, much overdue for a pullback, and it basically pulls back to where it should pull back to. So, needless to say, shaping up to be an interesting month of October. I don't know about y'all, the game plan here is to kick some ass, so let's do exactly that. But appreciate you watching. See you all Monday morning. Until then, be good.